Imagine a world, maybe not so different from ours right now, where the banks looking after your money are uh, basically locked in this constant high-stakes fight. They're up against an invisible enemy that's changing all the time. And this isn't, science fiction. It's just the reality for banking today. It's a battlefield, really. And the numbers are kind of staggering. Fraud losses, they're projected to hit $1 trillion by 2030.
A trillion. It's almost hard to wrap your head around that kind of number, isn't it?
It really is. It just shows how critical this fight against financial crime has become for all of us. So today we're doing a deep dive into something that honestly affects every single one of us with a bank account. We're looking at how artificial intelligence, AI, and machine learning ML are not just like tweaking things, but actually revolutionizing how banks detect fraud.
Yeah, revolutionizing is the right word. It's a massive shift.
Exactly. And we'll explore AI as this powerful shield, the bank's new defense weapon. But also, and this is the really wild part, how AI is increasingly a tool used by the criminals themselves.
Right. It's become this AI versus AI battleground playing out behind the scenes in the digital world.
So our mission today is to really unpack this huge shift, moving away from those, let's be honest, often outdated traditional ways banks used to spot fraud.
Which often didn't work that well anymore.
Right. And moving towards these cutting-edge AI systems. We'll dig into the real benefits, the actual advantages they bring. But we also need to talk about the challenges because, it's never simple. There are definitely hurdles.
Absolutely. There are significant complexities involved.
And then we'll take a peek into the future, see what's coming next for financial security. Our goal is to give you a really clear, informed view, packed with some pretty surprising facts and insights. We've drawn on a bunch of expert sources to get the full picture. What I'm picturing here is it's just fundamental. This isn't only about banks protecting their profits. It's deeply about the security of your money, your identity, and that basic trust you put in the whole digital financial system every single day. And it gets really fascinating when you see just how fast this technology is moving and how much it matters for your peace of mind.
That battlefield analogy you used, it's spot on. The whole landscape has fundamentally changed. Think about how banking has digitized so rapidly. I mean, the convenience is amazing, right? Instant transfers, banking on your phone, paying online with a click.
Oh yeah, it's made life so much easier in many ways.
Definitely. But that very convenience, that hyper-connectivity, has also, maybe unintentionally, rolled out a giant welcome mat for criminals. Every easy digital path we create for ourselves also becomes a potential path for fraudsters to exploit. So we're seeing attacks now that are just unprecedented in scale and, frankly, in sophistication. That's why this move to AI isn't just like a nice to have for banks. It's becoming essential for survival.
It really is a paradox, isn't it? More convenience for us somehow equals more risk.
Exactly.
Every new feature, every streamlined process potentially opens up a new vulnerability. Sources like Infosys, BPM, and Identify talk about this constantly. This rapid digital growth, while great overall, is directly fueling this massive rise in sophisticated fraud. It's like building a superhighway.
And forgetting to build the security checkpoints along the way, initially at least.
Yeah, precisely. And you mentioned the scale.
Yeah.
The numbers you see are just mind-boggling.
They really are. Global fraud losses aren't just large. They're expected to blow past $485 billion just this year.
Wow. $485 billion.
Yeah. Think about this, more than the entire economy of many countries, just disappearing into the pockets of criminals. And what's really telling is that something like 80% of this fraud, it's happening through digital banking channels. It's overwhelmingly a digital crime wave.
80%. So it's not people robbing banks with masks anymore. It's happening online.
Pretty much. If you look at specific regions like Asia Pacific, the numbers are astronomical. Banking fraud losses hit $221.4 billion there. And within that, $190.2 billion was specifically from payments fraud. That's data from Trust Decision and NASDAQ's 2024 report.
It's just staggering. These aren't abstract numbers. It's real money being stolen from real people and businesses. It must really shake people's confidence.
It absolutely does. It erodes trust in the whole system.
And it's not just the amount of fraud that's going up, right? It's the way they're doing it. The sophistication's getting scary.
Oh, definitely. We're way beyond those old phishing emails with bad grammar. Today's fraudsters are seriously skilled, and crucially, they're often using AI themselves.
So they're using the same tech against the banks.
Yes. A recent Feeds Eye report found that over half of all fraud now involves AI in some way.
Over half.
And get this, 92% of the financial institutions they surveyed said criminals are actively using generative AI in their schemes.
Generative AI,
Yeah.
like the tools that create text or images.
Exactly. The ones that can write convincing emails, create fake profiles, even generate fake video or audio. It truly is AI versus AI now.
Wow. So what kind of tactics are we talking about?
Well, the hyper-realistic deception stuff is particularly worrying. It plays on our basic human instinct to trust what we see and hear. Deepfakes, for instance, those fake but incredibly convincing videos or audio clips, they're now used in 44% of fraud schemes.
Almost half. That's incredible.
And 60% of the security professionals surveyed see voice cloning as a huge growing threat.
Voice cloning, so they could make it sound like my boss or my partner calling me.
Potentially, yes. It's not just about fooling a computer system anymore, it's about manipulating people psychologically. We're seeing synthetic identities, completely fabricated people, and AI-powered phishing scams with perfect grammar, realistic cloned voices, even videos of people who don't exist. Finovify and Feedzai really paint a picture here. It's becoming incredibly hard for the average person, for you, to tell what's real online and what's just a very clever fake designed to trick you.
That is genuinely terrifying. The
Right.
thought that someone could fake a video call from a colleague or clone a family member's voice asking for money just takes the threat to a whole new level.
It really does. And we're also seeing a big rise in what's called authorized push payment, or APP scams.
APP scams. How do those work?
Trust Decision points out that AI is used here for really sophisticated social engineering. They manipulate victims, often through very convincing fake emergencies or opportunities, into willingly sending money themselves.
So I make the payment thinking it's legitimate.
Exactly. And because you authorized it, it's much, much harder for banks to stop or reverse it, and way harder for you to get your money back. It exploits the rules because technically the payment was authorized by the account holder.
That's incredibly sneaky. So with fraudsters getting this smart using AI themselves, how did the old methods even stand a chance?
Well, that's the crux of it. They really didn't, or they increasingly don't. What's fascinating and deeply worrying from a defense perspective is the asymmetry that developed. Traditional systems, the rule-based ones, basically look for known bad patterns. They work on predefined, if this happens, then flag it rules.
Like if a transaction is over a certain amount from a new location.
Exactly, simple rules like that. But the problem is they're up against criminals who can use AI to generate brand new, never-before-seen attack patterns on the fly. They're constantly changing tactics.
So the rulebook is always out of date.
Precisely. Sources like Infosys, BPM, and Identify call these old methods increasingly inadequate. They just fail to meet the demand of modern threats. They're limited because humans have to define every single rule, they're prone to errors, and they just can't adapt fast enough to new fraud types.
And I bet they flagged a lot of legitimate stuff too, right? The false positives.
Oh, absolutely. That's a huge problem. They often generate tons of false positives, perfectly normal transactions getting blocked. That frustrates customers enormously, adds friction.
I've definitely had that happen. It's really annoying.
Right. And worse, while they're busy flagging legitimate things, the really clever novel fraud can slip right through the cracks because it doesn't match any existing rule. So it raises this critical question for you listening and for the whole industry. How can banks possibly defend against an enemy that's constantly reinventing itself, learning and adapting at machine speed if they don't have tools that can do the same?
They need to fight AI with AI.
Exactly. That's where AI becomes not just helpful, but necessary. It allows banks to level the playing field or maybe even get ahead.
Okay, so if the old way was like using a static map against an enemy who teleports, AI is like giving the defenders their own dynamic, real-time intelligence. This brings us to that really crucial shift AI enables, moving from just detecting fraud after the money's got
Reactive.
damage control.
To actually predicting and preventing it before it even happens, before you lose a cent. That sounds like the holy grail.
It really is. Sources like Trust Decisions, Identify, Gartner, they all stress this fundamental shift. It's about moving from being reactive to being truly proactive. Preemptive even.
And doing it fast, I assume.
Absolutely. The real-time imperative isn't just jargon here. Modern fraud happens in milliseconds, across borders. You can't wait for end-of-day batch processing anymore. AI systems like the ones Elastic and CA Monk described can analyze transactions as they happen, instantly, identifying suspicious stuff and blocking it right there and then.
So potentially stopping a bad transaction before it even finishes processing. That's the goal. It's a huge strategic advantage. Instead of just cleaning up messes, you're actively stopping them from happening in the first place. For you, the customer, that's a massive upgrade in protection.
Yet the relief of knowing your bank might actually stop the fraud before your money vanishes instead of just telling you about it later.
Yeah.
That's huge. So how did AI actually do this? What's going on under the hood that makes it so different? What are the core ideas?
Okay, there are basically three key pillars, three main ways AI transforms fraud detection. First, it's just the sheer volume and velocity of data it can handle. AI systems analyze large volumes of transactional data in real time. We're
Yeah.
talking billions of data points, transactions, logins, device info, everything. A human team or even older systems simply cannot process that much information that quickly. It's physically impossible.
So capacity and speed. It can drink from a fire hose of data continuously. That's number one. What's number two?
Number two is its ability to learn continuously. This is critical. Unlike those static rule sets that need humans to manually update them, which means they're always lagging behind the criminals, AI systems continuously learn from new data. They literally update their understanding as new data comes in.
So every transaction, good or bad, makes the system smarter.
Precisely. It constantly refines its models of what's normal and what's suspicious. It adapts in real time. The defense system is always evolving, always getting better. It's like an immune system learning to recognize new threats.
That is incredibly powerful. A defense that learns on the job constantly. Okay, and the third pillar.
The third one is its pattern recognition capability, which is just unprecedented. Machine learning models can identify simple and complex patterns that humans or traditional software would just simply miss.
Patterns that aren't obvious.
Exactly. Subtle connections, hidden correlations across seemingly unrelated activities. It can even discover hidden fraud patterns without prior training on that specific type of fraud. Think of it like this. Old systems were looking for known red flags. AI can look at a million tiny, seemingly insignificant details and see how they connect to form a suspicious picture that no human would ever spot in time. It sees the invisible threads.
Okay, this is where it gets really interesting for you, listening at home. Imagine your bank has this digital guardian, right? It's not just watching every transaction. It's getting smarter with every single one. It's learning, adapting, protecting you in real time, often without you even knowing it's happening. That's the kind of power AI is bringing to your financial security.
Yeah.
It's like having a super smart, always learning detective dedicated just to protecting your money.
And to really get how this digital guardian works, we need to look a bit closer at the actual AI techniques involved. It's not just one thing called AI. At the core, you have machine learning, ML algorithms. They're the foundation. They chew through massive amounts of historical data, billions of past transactions, customer behaviors, known fraud examples, and they learn the patterns associated with both legitimate activity and fraudulent activity. They essentially teach themselves what normal looks like and what suspicious looks like.
So ML is the engine learning from history.
Mm,
But I know there are different kinds of ML, right? Like supervised and unsupervised. How do they fit in?
exactly. There are two main types relevant here. First, supervised learning models. These are trained on data that's already been labeled. So the system has shown lots of examples of transactions that were definitely fraud and lots that were definitely legitimate. It learns to recognize the characteristics of those known fraud types and flags, similar patterns it sees in data. It's great for spotting variations of threats we already know about.
Okay, so supervised is like teaching it with labeled examples. This is bad, this is good. What about unsupervised?
Unsupervised learning models are different and really important for catching new threats. They don't need labeled data. Instead, they look for anomalies, things that just don't fit the general pattern of normal activity, even if that specific type of weirdness has never been seen before.
Ah, so it's looking for anything out of the ordinary, even if it doesn't know why it's ordinary. Like finding the needle in the haystack without knowing what a needle looks like beforehand.
That's a great way to put it. They excel at spotting completely new, previously unseen fraud techniques because they're just looking for deviations from the norm. This makes them vital for staying ahead of fraudsters who are constantly inventing new schemes.
So supervised handles the known threats, unsupervised finds the brand new stuff. That sounds like a powerful combo, and anomaly detection is part of that.
Yes, anomaly detection algorithms often use unsupervised learning. They build a profile of what's normal for a specific customer or a specific type of transaction, and then they flag anything that deviates significantly from that baseline. Like if you usually buy coffee every morning for $5 and suddenly there's a $5,000 transaction at 3 a.m. from a different country, that's a major anomaly, even if that specific pattern wasn't explicitly labeled as fraud in the training data.
Got it. Okay, beyond machine learning, there's also deep learning. That sounds, well, deeper. How is it different?
Deep learning, DL, is a more advanced subset of machine learning. It uses complex structures called neural networks, which are loosely inspired by the human brain, with many layers of processing. While ML is great at finding patterns, DL can understand more complex relationships and sequences. It's particularly good at analyzing a series of actions over time.
So not just looking at one transaction, but the whole story around it.
Exactly. It might see a login from an unusual device, followed by a small test purchase, then a failed password reset attempt, and then a large transfer attempt. Each step alone might not trigger a simple rule, but deep learning can analyze the sequence and recognize it as a highly suspicious pattern indicative of an account takeover attempt. It adds that layer of contextual understanding.
Okay, that makes sense.
Well,
What about all the text data? Emails we send the bank, chat messages with customer service. Can AI understand language too?
absolutely. That's where natural language processing, NLP, comes in. NLP gives AI the ability to read and interpret human language, what we call unstructured data.
Yeah.
So it can analyze emails for phishing cues, scan chat logs for signs of social engineering, check documents automatically, even analyze the sentiment in a customer interaction. Like, does this person sound unusually stressed or coerced?
Wow, so it's not just keywords, it's understanding the meaning and feeling behind the words.
Yes, to a significant extent. For example, NLP can identify phishing emails not just by looking for dodgy links, but by analyzing the tone, the urgency, the specific persuasive language patterns that scammers often use. It's much more sophisticated than simple keyword matching.
That's a huge leap. Okay, what about how we use our devices? The way I type or move my mouse? Can AI learn my specific habits?
It can, and that's a fascinating field called behavioral biometrics. This adds another layer of security by monitoring how you interact with the banking platform, not just what you type. It learns your unique rhythm, your typing speed, the way you pause, how you move the mouse or swipe on a screen, even the angle you typically hold your phone. It builds a unique behavioral fingerprint for you.
So if someone steals my password but types completely differently or holds the phone weirdly, the system might know it's not me.
Precisely. This enables something called passive continuous authentication. It runs silently in the background, constantly checking if the behavior matches your known patterns. If suddenly the typing speed changes dramatically or the mouse movements become jerky and unfamiliar, it can flag the session as high risk, even if the correct password was used. And it does this without interrupting you with extra logins or challenging.
That's brilliant. Security without the hassle.
Exactly. And related to this is device intelligence. This creates a unique fingerprint for the device you're using based on lots of hardware and software details. So even if your IP address changes, the system can still recognize your specific phone or computer, adding another layer of trust. A real-world example is the State Bank of India, SBI. They've rolled out behavioral biometrics for their mobile banking to boost security without making it harder for customers to use the app.
Okay, so you've got ML learning patterns, DL understanding sequences, NLP reading text, behavioral biometrics, watching how we interact. All this feeds into making decisions, right?
Yes, all these signals converge into automated decision-making. The AI system takes all these inputs, weighs multiple risk factors simultaneously, often hundreds or thousands of them, and makes a judgment in milliseconds. Is this transaction likely legitimate? Or does it carry a high probability of fraud? Based on that assessment, it can instantly allow the transaction, block it, or maybe flag it for a quick human review. It's about making fast, informed decisions to stop fraud before it happens. And if you connect all these pieces together, you see it's not just one magic bullet, it's a multi-layered defense. ML learns the basics from data, DL adds depth for complex scenarios, NLP reads the communications, behavioral biometrics confirms it's really you. It's this combination, this synergy, that creates a defense system far more adaptive and intelligent than anything rule-based systems could ever achieve. They just can't replicate that dynamic, multifaceted approach.
It really sounds like banks are building this incredibly sophisticated, almost like an Iron Man suit, for our financial security. And the benefits go way beyond just catching bad guys faster, right? This must have broader positive effects for banks and especially for us, the customers. Like, one thing that drives me crazy is when my own perfectly normal transaction gets blocked. False positives. Does AI help with that?
Massively. That's one of the biggest improvements. AI significantly enhances accuracy. This means far fewer legitimate transactions get mistakenly flagged or blocked. Think about how much frustration that saves. Trust Decision actually estimates that predictive analytics using AI can cut false positives by up to 50%.
50% fewer mistaken blocks. That's huge. That alone would make my banking experience so much smoother.
Exactly. Fewer declined purchases when you're traveling, fewer panicked calls to the bank. It removes a major point of friction for customers.
Okay, so better accuracy, less hassle for us. What else? Does it speed things up?
Absolutely. Faster decision making and resolution is another key benefit. AI can process that massive amount of data in milliseconds. Decisions that used to take hours or even days can now happen almost instantly. We're talking about sub-millisecond decision engines evaluating risk in under 200 milliseconds. That's faster than you can blink.
Wow.
This speed means suspicious transactions can be put on hold or investigated immediately without delaying legitimate ones. And if fraud does somehow occur, this faster detection means quicker resolution and getting compensation back to affected customers much faster. That really minimizes the impact on you.
Faster detection, faster fixes, that sounds
Right.
great. And what about inside the banks? Does this make their operations run better?
Definitely. There's a big boost in operational efficiency. AI takes over a lot of the routine, repetitive, high-volume tasks. Things like initial checks for loan applications, basic claims reviews, parts of customer onboarding, gathering data. This frees up the human fraud teams. FeedSci found that 43% of financial professionals reported their teams became more efficient thanks to AI. Now, the human experts can focus their time and skills on the really tricky, complex, high-stakes fraud cases instead of getting buried under thousands of simple alerts.
Makes sense. Let the machines handle the routine stuff. Let the humans handle the complex judgment calls. And efficiency usually means cost savings too, right?
Precisely. Less fraud obviously means fewer losses and fewer chargebacks. But the automation itself also reduces costs. You don't need as many people doing manual reviews. Finovify and RTS Labs point this out, and there are some amazing real-world examples. PSCU, that's a big network of credit unions, they partnered with Elastic. Over 18 months, they reported saving $35 million in fraud losses. And get this, they reduced the average time it took them to respond to a fraud incident by 99%.
99% faster response and $35 million saved. That is just incredible. That's transformative.
It really is. It shows the massive financial and operational impact AI can have.
In all of this, better accuracy, faster resolution, banks saving money, it must all feed back into a better experience for us customers, building more trust.
Absolutely. When banks effectively stop fraud before it hits your account, when they protect your personal information robustly, that builds confidence. You feel safer knowing your bank has strong, proactive defenses. And as we said, fewer false positives just makes everything smoother. It enhances the overall customer experience, feeling secure and having frictionless banking. That's the ideal combination.
It really is. Peace of mind is priceless when it comes to your money. And is this technology something banks can easily scale up as they grow or offer new products?
Yes, scalability is another big advantage. AI systems can handle massive increases in transaction volume or adapt to new product lines, like launching a new type of loan or expanding into a new region without needing a proportional increase in staff. The AI just scales up its processing. That's a huge benefit for banks wanting to innovate and grow efficiently.
Okay, so let's bring it all together for you, the listener. What does this AI revolution actually mean for you? It means your bank isn't just playing defense anymore. It's building a system that's smarter, faster, and way more reliable at protecting you. Think of it like having a super intelligent security guard who knows your habits, spots trouble instantly, and deals with it before you even know there was a risk. All while letting your normal everyday transactions flow through without a hitch. It's genuinely a massive upgrade for your financial security and your peace of mind. All right, so AI sounds like this amazing, almost indispensable shield for our financial security, which it is in many ways. But like any really powerful technology that's evolving super fast, it's definitely not perfect. There's some pretty significant challenges, some tricky ethical questions we need to grapple with. It's not a magic wand.
Not at all. It's crucial to have a balanced view. And one of the biggest ongoing issues is that technological arms race we touched on earlier.
Like the fraudsters keep getting smarter too.
Exactly. They don't stand still. They're constantly adapting, finding new ways to attack, and as we said, often using AI themselves to do it. This means the bank's AI models need constant updates, constant retraining, sometimes even fundamental redesigns just to keep pace. It's this relentless cycle of innovation on both sides. It's an endless game.
So the defense always has to be evolving, just like the threat. It's never done.
Okay.
Okay, what else? What about the data these systems rely on? You said they need huge amounts of data.
Yes, and that leads to really critical issues around data quality and bias. This is a huge one. An AI system is only ever as good or as fair as the data it learns from. It needs large volumes of high-quality data.
Garbage in, garbage out, right?
Precisely. If the training data is incomplete, if it's inaccurate, or worse, if it reflects historical biases, then the AI's predictions will be inaccurate or biased too. Think about it. If historical lending data showed bias against certain groups, an AI trained on that data might unintentionally learn and perpetuate those same biases, unfairly flagging legitimate transactions or denying services to certain demographics.
Wow. So the AI could accidentally become discriminatory just by learning from biased history. That's a serious ethical problem.
It's a massive concern. Infosys BPM warns this can create a really unpleasant experience for customers and lead to genuine unfairness. And it's a practical problem, too. FeedSci found that 87% of banks say managing their data dealing with fragmented systems, different formats, regulatory limits on data use is actually their biggest hurdle in adopting AI effectively.
87%. So just getting the right data, clean and unbiased, is a huge challenge in itself. Okay, so bias is a risk. What about the AI just missing things, getting it wrong?
That's the risk of false negatives. This is when fraud does happen, but the AI system fails to detect it. Maybe the fraudsters found a clever way around it, or the AI just wasn't trained on that specific novel pattern yet.
So the bad guy slipped through the net.
Exactly. And as Infosys BPM puts it, this gives miscreants unfettered access. False negatives are arguably worse than false positives because real harm occurs. Customers lose money, banks suffer losses, and trust is damaged. The system failed its core job.
Right. And with AI getting so powerful and making such important decisions, there must be a ton of rules and regulations involved. That sounds complicated.
Oh, it's incredibly complex. Navigating the regulatory and compliance risks is a minefield. You've got banking regulations that vary by country, strict data privacy laws like GDPR in Europe or CCPA in California, plus emerging ethical guidelines. Staying compliant with all of that while also innovating with AI is, as multiple sources say, cumbersome.
How do privacy laws like GDPR affect AI, which needs lots of data?
Well, laws like GDPR dictate exactly how personal data can be collected, stored, processed, and even deleted upon request. AI systems thrive on data, so banks have to figure out how to train their models effectively while rigorously protecting individual privacy according to these complex rules. It's a very fine line to walk, and regulatory bodies are watching closely. The Financial Stability Oversight Council, FSOC in the U.S., for example, uses a sliding scale for AI oversight.
A sliding scale. How does that work?
Basically, the more risk associated with how AI is being used, the more scrutiny it gets. So AI used for critical things like deciding on loans, high-frequency trading, or fraud detection, things that directly impact consumers or market stability, gets the highest level of regulatory attention.
Because the potential harm is greater.
Exactly. Whereas AI used for, say, internal risk modeling might get moderate scrutiny, and AI automating simple back-office tasks gets lower scrutiny. It focuses the oversight where it matters most.
That makes sense. But there's still that black box problem, isn't there? Where even the creators don't fully understand why the AI made a certain decision. How do you regulate or trust something you can't fully explain?
That is a fundamental challenge, especially with complex deep learning models. This lack of explainability makes it really hard. How does a bank explain to a customer or a regulator why a loan was denied or an account flagged if the answer is just the algorithm decided?
Yeah, they wouldn't build much trust.
Not at all. And it's why explainability is such a huge focus now. FeedSci found 89% of banks prioritize making their AI systems explainable and transparent. There are efforts like FeedSci's Trust Framework, transparent, robust, unbiased, secure, tested, designed specifically to help banks build AI systems that are not only powerful but also understandable, ethical, and auditable. We need to be able to look inside the box.
So building trust through transparency, that seems vital. Okay, beyond the data and ethics, what about just the practical IT side of things? Plugging this AI into existing bank systems must be tricky.
It can be a major headache. Implementing AI properly requires a really robust data infrastructure. You need the hardware and software to handle real-time data flows and massive processing loads, and then you need seamless integration with all the existing, often older, banking systems and APIs. Getting everything to talk to each other smoothly can be incredibly complex and expensive, especially for large, established banks with legacy technology. It's a big technical lift.
So it's not just buying software, it's potentially re-engineering a lot of their core IT. And you mentioned something earlier about action bias. What's that about?
Yeah, RGP highlights this risk. Action bias is the tendency to jump on the bandwagon to invest in AI just because everyone else seems to be doing it without a clear strategy or understanding if it's the right solution for your specific problems.
Like chasing the hype.
Exactly. It can lead to wasted money, failed projects, and disillusionment, just like we've seen with other tech hype cycles in the past. The warning is be strategic, be thoughtful, don't just implement AI for the sake of implementing AI. Make sure it solves a real problem and you can manage it responsibly.
Good advice for any new tech, really. Okay, one last big question here. With AI getting so good, do we still need humans in the loop? Or will AI eventually just take over fraud detection completely?
That's a question a lot of people ask, but the consensus among experts is very clear. Human oversight remains absolutely essential. Sources like FeedZai, Trust Decision, Identify all stress this. AI is incredibly powerful for processing data and spotting patterns humans can't, but it lacks common sense, ethical judgment, and the ability to handle truly novel situations it wasn't trained on. Humans provide the context, the critical thinking, the ethical compass, and the final decision-making, especially in complex or ambiguous cases. AI augments human intelligence. It doesn't replace it.
So it's a partnership, not a replacement.
Precisely. A human-machine team is far more effective than either could be alone. And this brings up a really important point for you, the listener, to consider. While AI offers incredible power and huge benefits in fighting fraud, we absolutely can't just deploy it without thinking very carefully. These challenges, data bias, regulatory hurdles, the black box problem, they aren't just small technical issues, they're fundamental ethical and operational questions. They demand careful planning, strong governance, a real commitment to transparency, and ongoing human oversight. The goal has to be not just powerful AI, but truly responsible AI that serves everyone fairly and securely.
Powerful and responsible. That's the key takeaway. So for the banks trying to achieve that, trying to navigate these challenges and build defenses that are truly ready for the future, what's the game plan? What does successful implementation actually involve? It sounds like way more than just buying some AI software.
Oh, absolutely. It's a deep strategic commitment across the organization. It really starts with strategic planning and building a robust infrastructure. You can't just dabble in AI for fraud. Infosys BPM stresses it needs strategic planning and execution. That means having a clear vision, but also building the foundation. This involves investing in a robust data infrastructure, the hardware, the software, the data pipelines capable of handling real-time processing and those huge data volumes we talked about. And just as critical is ensuring seamless system integration, the AI needs to connect smoothly with existing core banking systems, payment gateways, APIs. If it's stuck in a silo, its value is massively reduced.
So get the plumbing right first. Make sure everything can connect and handle the load. Once that foundation is solid, what about the AI models themselves? How do banks choose the right ones and keep them effective?
That's the ongoing process of model selection, training, and continuous refinement. It's not set it and forget it. Banks need to carefully select the right ML techniques for their specific fraud challenges, and they need systems designed for continuous learning, constantly adapting to new data. Crucially, this refinement isn't just about accuracy, it's also about ensuring the models stay compliant with regulations as they evolve. It's this constant cycle. Train, deploy, monitor, gather new data, retrain, refine, over and over again.
Always learning, always improving. And we keep coming back to data quality and bias. How do banks actively manage that during implementation?
It has to be a top priority. Ensuring data quality and security is non-negotiable. This means rigorous processes for cleaning data, validating it, and actively looking for and mitigating potential biases in the training data sets before they get baked into the AI models. And alongside that, you need ironclad data privacy and security measures to protect customer information and comply with all the rules. You have to treat data with extreme care.
So high quality, unbiased, secure data is the essential fuel. Got it. Who actually does all this work? What kind of team do you need?
It really requires operational efficiency through collaboration and expertise. You need a dedicated, multidisciplinary team working together seamlessly. This team typically includes AI specialists, data scientists who build and tune the models, experienced fraud analysts who understand the real-world criminal tactics, and compliance experts who know the legal and regulatory landscape. They all need to collaborate closely right from the start, designing, building, deploying, and maintaining these systems. Silos just don't work here.
Makes sense. Everyone brings a different crucial piece of the puzzle. Are banks also trying to connect their different crime-fighting efforts more closely now, like fraud and money laundering?
Yes, that's a major trend. We're seeing the rise of unified fraud and AML platforms. AML is anti-money laundering. Historically, fraud teams and AML teams often operated separately with different systems and data. Now, banks realize that financial crime is often interconnected. These unified platforms bring all the data together, allowing for a more holistic view of risk. They streamline compliance reporting and make investigations faster and more effective because analysts can see the whole picture. KPMG found 59% of banks are already moving towards this integrated approach.
A single view of risk across different types of financial crime. That sounds much more powerful. And how does AI help the human analysts manage their workload, the alerts they need to investigate?
That's where AI-assisted case management comes in. These aren't replacing the investigators, but helping them work smarter and faster. The AI can automatically triage incoming alerts, ranking them by urgency or likelihood of being real fraud. It can pull together relevant data for the investigator, suggest potential lines of inquiry, or even automate parts of the reporting. It basically acts as an intelligent assistant, handling the routine parts of the investigation so the human expert can focus on the critical analysis and judgment.
Like a superpowered assistant for the fraud detectives. Okay, so there's a real strategic shift happening. RGP outlined some key principles for this new playbook, didn't they?
They did. They highlighted 3 crucial imperatives. First, governance first. This means thinking about oversight, risk management, and compliance from the very beginning of any AI project. Don't build the AI and then try to figure out the rules. Embed governance right into the design and development process.
Build responsibility in from the start. Makes sense. What's the second one?
Second, reusable AI frameworks. Building AI models can be expensive, and those costs are likely to rise. So smart banks are investing in reusable components, data pipelines, model templates, governance tools that they can use across multiple AI projects. This lowers costs, speeds up deployment, and ensures consistency. Build it once, use it many times.
Smart engineering, basically.
Yeah,
And the third imperative, it links back to that trust issue again.
exactly. Third is explainability and trust. Banks need to prioritize developing and using explainable AI, XAI, and being transparent about their data practices. Being able to explain why an AI made a decision is becoming essential for maintaining customer trust and satisfying regulators. No more impenetrable black boxes.
Okay, and Trust Decision also laid out some practical, strategic recommendations for building these future-ready defenses. What were their key points?
They offered 5 concrete steps. 1. Invest in next-gen detection platforms. Basically, adopt the latest AI-first tools for transaction monitoring and decision-making that operate in real time and can adapt quickly. Stay technologically current.
Get the best, fastest tools was number 2.
2. Build hyper-personalized risk frameworks. Use all that data ML models, behavioral biometrics to create unique, dynamic risk profiles for each individual customer. Tailor the defenses to the individual, making it much harder for fraudsters to impersonate them.
Know your customer really well, digitally speaking.
Okay, number 3.
3. Develop a comprehensive fraud intelligence strategy. Get a unified view of risk across all channels, online, mobile call center branches, and set up strong processes for sharing threat intelligence internally so everyone knows what's happening. Break down internal silos.
See the whole board, not just one square. Number 4.
4. Embrace collaborative intelligence. Don't just share info internally. Join forces with other banks, payment processors, even telcos. Share anonymized threat data through industry initiatives. Fraudsters collaborate, so the defenders need to collaborate too. Build a network defense.
Strengthen numbers. And the final recommendation. 5. Prioritize operational efficiency. Use automation and AI-assisted tools to handle the routine work, streamline investigations, and free up your human experts to focus on the most complex and critical threats. Work smarter, not just harder.
Okay, so if you are running a bank, or honestly, even if you're just someone interested in how your money is kept safe, that really lays out the roadmap. It's about blending the best of human smarts, the judgment, the ethics, with the incredible power of AI, the speed, the pattern recognition, and doing it all within a strong ethical framework with robust governance to build defenses that are genuinely proactive and ready for whatever the fraudsters throw at them next. So looking even further ahead now, what's on the horizon? What are the next generation innovations in AI fraud detection that are starting to emerge? Where is this technology heading?
Well, one really big one we've touched on is explainable AI, XAI, becoming mainstream. The demand for transparency is huge, so we're seeing more and more tools and techniques being developed specifically to open up that AI black box. These tools aim to provide clear, understandable reasons for why an AI flagged a transaction or made a certain risk assessment. This isn't just nice to have, it's becoming crucial for regulatory approval, internal audits, and building genuine customer trust. People need to understand the why.
Definitely. Moving beyond computer says no to computer says no, and here's why. That would be a massive improvement. What else is brewing?
Another really innovative area is federated learning. This is a clever way for banks to collaborate on training AI models without actually sharing their raw sensitive customer data with each other.
How does that work?
Each bank trains a model on its own private data. Then, instead of sharing the data, they only share the insights the model learned, like updated parameters or model weights to a central aggregator. This aggregated knowledge is used to create a much smarter, more powerful shared model benefiting everyone. It allows for collective intelligence building, making everyone's defenses stronger by learning from a much wider pool of fraud patterns, but critically, without compromising data privacy. It's collaborative defense with privacy built in.
That sounds like a brilliant solution. Getting the benefits of shared data without the risks. What about combining AI with other emerging tech, like blockchain?
Yes, there's definitely potential in deeper integration with blockchain and smart contracts. Imagine combining AI's analytical power with blockchain's secure, unchangeable record keeping. You could potentially automate security checks within the transaction itself using smart contracts, predefined rules embedded directly into the blockchain. This could make certain kinds of payment fraud almost impossible because the security is part of the transaction's fundamental structure. It's inherently secure by design.
Security baked right into the transaction. That's a powerful idea. Okay, let's get really futuristic. Quantum computing. Does that play a role eventually?
It's still very early days, very much research territory, but yes, quantum integrated AI is something people are exploring for the long term. Quantum computers promise calculation power far beyond today's machines. Fusing that with AI could potentially unlock incredible levels of forecasting accuracy and complex scenario modeling. Think about predicting financial crises with much greater lead time, optimizing huge investment portfolios with near-perfect foresight, or designing fraud-proof trading algorithms. It's mind-bending potential, but still quite a way off from practical deployment.
Okay, so maybe not next year, but something to keep an eye on. Let's come back to generative AI for a second. We know the bad guys are using it. How are banks starting to use it for good?
Banks are definitely exploring positive uses. One area is document summarization and contract analysis. Gen AI can read through thousands of pages of dense legal documents or financial reports incredibly quickly, summarize the key points, identify potential risks or non-standard clauses, even suggest revisions. This could massively speed up due diligence or compliance reviews.
Using AI to understand complex documents faster. That makes sense. Any other ways banks are using it?
Some are developing tools to help customers directly. Feedzai, for instance, mentioned their Scamalite generative AI agent. The idea is to use AI to give you, the customer, personalized warnings and explanations about potential scams you might encounter, helping you learn to spot them yourself, using the tech to educate and empower users.
I love that, turning the tables and using Gen AI to fight scams. What about the bigger picture, like investing? Is AI influencing things like ESG?
Yes, AI in ESG investing is becoming significant. ESG stands for environmental, social, and governance factors. AI tools are being used to scrape and analyze vast amounts of data, news reports, company statements, missions data, social media sentiment to assess how companies are really performing on these non-financial metrics. This helps investors look beyond just the financial numbers to understand sustainability risks and ethical performance, guiding capital towards companies that are genuinely more responsible and resilient. It brings data-driven rigor to ESG.
So AI helping direct money towards more ethical companies. That's interesting. And you mentioned collaboration a few times as being key for strategy. That seems like it will only become more important.
Absolutely. Enhanced collaboration across institutions is a trend that's only going to accelerate. The threats are too big, too fast, and too sophisticated for any single bank to fight alone. So, sharing anonymized fraud data, exchanging threat intelligence through trusted networks, working together on best practices, this collective defense is becoming the standard. The whole industry needs to work together.
The united front. Okay, and finally, just to reiterate that point about humans, the future role of AI in banking. It's definitely augmentation, not replacement.
Unequivocally. Every serious discussion emphasizes that AI is a tool to augment human capabilities. It handles the scale, the speed, the complex pattern matching that humans can't. But it frees up the human experts to do what they do best. Apply critical thinking, make nuanced judgments, handle complex exceptions, ensure ethical considerations are met, and build trust with customers. It's about making the human experts more effective, not redundant.
The best of both worlds working together.
Exactly. If you think about that bigger picture for you, the customer, the future isn't some cold robotic system making all the calls. It's aiming for this sophisticated, intelligent partnership. AI does the heavy lifting with data, spots the subtle threats, automates the rapid responses. But humans provide the crucial oversight, the ethical guidance, the strategic thinking, and the ability to handle the truly unexpected. This synergy, this partnership, is what promises to create a financial ecosystem that's truly resilient, adaptive, and ultimately more trustworthy for everyone.
Wow, what an incredible journey we've taken today. We started with that scary picture of escalating AI-fueled fraud. Then we explored the really sophisticated AI defenses banks are putting in place right now. And we've ended with a glimpse of some truly game-changing innovations on the horizon. It's crystal clear that AI is this incredibly powerful double-edged sword. It's a vital shield protecting our finances, but it's also a weapon constantly being sharpened by the criminals. And as AI digs itself deeper and deeper into our financial lives, on both sides of the fight, it really leaves us with a big question, doesn't it? Will this intense technological arms race ever really end? Or have we just entered a new reality where financial security is this constant real-time evolution? Perpetual dance between innovation and adaptation, where the very meaning of safe is always being redefined for your money, your identity, your digital life. Something definitely worth thinking about as we all navigate this rapidly changing financial future.